The Taxpert Pencon app enables you to see at a glance, as long as you put in the right figures, the tax consequences of various pension contributions and defined benefit accrual for your clients. Pension contributions and the annual allowance limit have become horribly complicated over the years, but what I've tried to do here is give you a quick and easy way of getting to the right answer. And you can use the tool either for compliance purposes, looking on this screen at 22-23 and seeing what the figures are for that year, or for planning purposes, we've got the 23-24 column. Now, there are several worksheets in this Excel-based app. We start with the user guide, and that sets out the basis on which we ought to use it. And I won't go into that in any more detail, but if I click for inputs, this is the key screen where in the yellow cells we are invited to input the various figures. And I've already input earnings figures. This is going to be of most use for high earning clients. So I've got 165,000 for 21-2, 312 in 22-3, and 300,000 estimated for the current tax year. There could be other income, there could be reliefs, but on the basis of that, we're then invited to put in the various pension figures, and here we'll focus on somebody with a SIP, a self-invested personal pension, and they've been paying regularly 60,000 a year gross into their personal pension. So those are money purchase contributions, but you've also got the fields in which you can enter any contributions that are paid gross rather than net, any that are paid by your employer, and defined benefit scheme pension input amounts, which is where it all gets quite complicated in terms of compliance. Now, the total pension input amounts will then generate for us with the income the threshold and adjusted income figures that determine whether the annual allowance is tapered. And we can see here on the figures I've put in that for 21-2, the annual allowance was 40,000 untapered. For 22-3, with these income figures, it would have been tapered to the minimum 4,000. But of course, this year, 23-4, the annual allowance is increased to 60,000. However, as it happens on the basis of these figures, it's tapered down to 40,000. So depending on the unused relief brought forward, there could be an excess charge. By the way, if I were to reduce the earnings figure to, let's say, 200,000, then, as we can see, the annual allowance does go up to 60,000. If I put that earnings figure up to 250,000, then the annual allowance will remain at 60,000. At that level, it's still not tapered. If I go up, however, to 280,000, on the basis of this 60,000 contribution, I can see that the annual allowance is restricted to 50,000. So you can play around with it like that. And then we've got scope here to bring forward any unused allowances. You can carry it forward for 3 years. And we can then see what the unused allowances are and the allocation of the allowances to the different pension input amounts for each year. No unused allowances, but in each of these years, we do have an excess charge. On the latest figures that I put in for 23-4, it would be 10,000. But for 22-3, it would have been 56,000. And of course, those are the figures that have to go on the self-assessment return on the additional information pages in box 10 on page 4. I've also done a little formula that determines the minimum additional premium that would ensure that you get your full personal allowance and the adjusted net income that's taken into account for restricting that personal allowance. But with figures these high, that's probably going to be irrelevant. So you've got the main input pages here with some narrative as to exactly what you're meant to be putting in. And this is a great example of the GIGO principle, garbage in, garbage out. We've got to ensure that the correct figures are put in. A hospital consultant, for example, instead of having direct contributions of 60,000, let's zero that, they may be members of the NHS schemes and have defined benefit scheme accruals of, let's say, 47,500. What effect would that have? Well, in that case, they're still going to be subject to that annual allowance restriction, and they're going to have an excess charge down here of 43,500. So you would then be able to go to the client report, and that summarizes the earnings and the contributions and shows in red here the estimated tax charge, 45% for this taxpayer, on the excess charge. Similar calculations for 23.4. And you've got, as usual with my apps, the workings, so you can follow where the figures come from in the tax calculation tabs. But here's an interesting point. The scheme pays tool would show us what the amount of the excess charge would be on the basis of the information that we've got. I can change the pension input amount for the relevant scheme. I think what I had on this most recent one, go back to it, was 47,500. No, it was 47,500. So if I go back to my scheme pays and put in 47,500, then on the basis of the legislation, the NHS pension trustees will be required to pay 3,375 of the tax liability on that, and would voluntarily, if asked, to pay the other 16,200. But these are complicated rules. I've set some of them out on this screen, but I'm not aware of any other software that provides this sort of level of detail. I also have a calculation of the pension input amount that can be used to guesstimate what the pension input amount might be in a particular case. And if we take an employee contribution rate, pensionable earnings, a pay rise, etc. Here, let's suppose the pay rise was £12,000. Then you can see how very quickly the pension input amount can grow to figures in excess of the annual allowance, whether tapered or not. But anyway, I think I've probably shown you enough here to give you a feel for what this app can do. A lot of work's gone into all the formulae, and it was originally designed simply to work out the maximum premium that you could pay for a director shareholder. Let me just show you. Suppose we've got a director shareholder with consistent earnings of that 165,000, and on that basis, let's also consider, instead of paying the contributions personally, the director shareholder is going to have a payment from their company. So we're going to have an employer contribution into a money purchase scheme. And what I can see is that on those figures of 165,000, there's no restricted annual allowance at all. So we could have the company paying £40,000 into their pension each year, well, until this year, when of course it's gone up to 60,000 because of the increase in the annual allowance. And if I check down here, the orange cells show me that on that there would be no annual allowance excess charge. However, if I put in a pay rise, let's suppose for 22-23, the pay had gone up to 200,000, would that make a difference? No, it wouldn't. We're still able to get the 40,000. But if I had other income of another 25,000, let's say, then I can see that the total income would restrict my annual allowance for that year to 27.5, and I've now got 12.5 excess charge. And that will then give rise, if I look at my client report, to a liability of 5,625. So that is quite a useful way of checking what needs to go on the tax return in terms of any excess charge. I could also perhaps see if I had paid or had too high a contribution in the previous year. Oh no, I was thinking if I had a lower contribution, let's suppose that the company only paid 28,000 in the previous year, that would give me 12,000 of unused relief brought forward, and that would be used up in 22.3, reducing the excess charge figure to £500. So playing around with it, once you've got it all set up, it's very easy to change some of the figures and see what the result is.